thank you guys for joining us. We're here at Bloom Shapiro in Quincy, and we are talking about tax season, what we can expect this year. We got a few questions in from people in advance, and people are welcome to chime in and comment some questions from our live. So can you guys just introduce yourselves?
Sure. My name is Christina Searle. I'm a tax manager here in the Quincy office. I specialize in individuals, trusts, and estates, and pretty much any taxes that happen to families. It's a deeply personal profession. I like working with individuals, so this is a great setup to get questions answered.
And I'm Tim Barry. I'm a partner here in Quincy. I'm a member of the private client group, along with Christina. And again, my focus is on individuals, families, trusts, and estates. And we are seeing a lot of changes this year, not only in the laws themselves, but also in the forms. A lot of people are surprised at the format of the new 1040, and we've been fielding a lot of questions about that, as well as the numbers that go onto the forms.
Okay. Well, can you kind of start with that, break us down? I know most people have a 1040. It's a pretty common thing that everybody will look at. So what are you saying that's different in the form itself this year?
So the form, what they've done is they've eliminated the form 1040EZ and the 1040A. These were versions of the form that could be used by people who had less sophisticated or challenging tax returns, and now everybody files a form 1040. What they've done is they've taken the first 2 pages of the form 1040 and they've made them half pages, so they look like a postcard. And you've probably heard that quite a bit in the last year, that everyone's going to be able to file their return on a postcard. Well, the IRS made it look like a postcard. Unfortunately, it's not quite that simple. So for a very simple return, a client or a taxpayer may be able to fill out just the first 2 pages, but for everyone else, there are now 6 supplemental schedules that need to be completed, and those are brand new for this year.
So we were kind of told when all of this was happening that it was going to simplify the tax code. Has that happened for the average person?
Yeah, I think in some cases, yes.
Okay.
With the increase of the standard deduction, some taxpayers will no longer have to keep track of some of their medical deductions and things of those types. So that might be some simplification. However, counterbalancing that, and Christina can agree with this, there are some extremely complicated provisions in the new tax law, and we're struggling with those right now to see how that all works through.
Yeah, especially where businesses are concerned. So if you're an individual who owns a business, a lot of these new changes are applicable to you.
Great. I'm going to edit our live commentary just real quick to say you're welcome to send in comments, so I promise I'm not ignoring you like texting. But kind of on that same wavelength, one of our people that sent in, Matt Carr, said he wanted to ask you guys about the new deduction limits for state and local taxes and the effects it will have on taxpayers here in the state. So whatever you guys think he should know.
Sure, so I'll start off. There is a new limitation on the total of state and local income and property taxes that an individual can deduct. That limit is $10,000 per year. That's a big change, particularly for taxpayers who live in high tax states, whether it's real estate and or income taxes. And so a lot of clients are seeing a large reduction in their deductions as a result of that.
Okay. And how do will the new standardized deduction limits affect the number of people who need to file itemized tax returns? That was the other half of his question about the deduction.
Yes, in fact, the statistic I heard is that in the new tax law, there'll be approximately 90% of individuals who will take the standard deduction. In prior years, that was closer to 70%. So it's a pretty big increase in the number of people who will be claiming the standard deduction.
Right, and so what are you seeing from what you finished so far? Are people claiming more or getting more money back, less money back on both the state and federal level? How is that looking so far?
Yeah, it's
Exactly. On some people, when they updated the withholding rates, people's withholding was actually going down to compensate for these tax changes. So for some people, there's not as big refunds. For other people who aren't relying on their withholding, they're paying estimated taxes. Sometimes it just washes out. Sometimes they're in about the same place as before.
Yeah, and I'll echo that with the withholding tables. That's been a big source of frustration for some taxpayers because they've heard that their tax bills were going to go down, and they did. It's just that they receive that money back throughout the year because the withholding tables changed. Correct.
Okay. Interesting. And then we had kind of going in a complete opposite direction. One a reader who sent this question in: can you deduct expenses for a memory care assisted facility on a family member? Like if I'm paying for my mom, can I deduct that?
Yes, there is a deduction for medical expenses, and that would qualify as a medical expense. You'd have to look to see whether your medical expenses exceeded a certain AGI threshold, and then you'd also further have to see whether your total itemized deductions exceeded your standard deduction to see whether you get any benefit. But that is a valid medical expense.
Okay, interesting. And then just kind of a general question that I had that I thought might be interesting, and then we can kind of go into more about what you guys are thinking. What's the number one thing that people who file their own taxes maybe don't know, or that you should know, or a common misconception, or if you could send one message out to the world of everybody who files their own taxes, what would it be?
That's a good question.
Without TurboTax that prompts me, I'd be lost, and I'm a very simple tax filer.
Yeah, so I mean, a lot of the returns that we prepare are not the simplistic TurboTax type returns. So if you're able to do the return yourself, then more power to you. I can't think of what you might be missing.
Okay.
I'm trying to think of anything.
Maybe the QBI deduction. If you were self-employed, for instance, and you had some self-employment income, there is a new 20% deduction, and that might be missed by somebody who wasn't up on the laws.
Kind of like a freelancer?
Correct,
Okay.
correct.
Interesting. And so what changes are we seeing? I know estate taxes are something that people deal with every day. It's very common, and I think it can be very stressful for people. So what are you seeing? What advice would you give to people? How are we handling estate taxes with the new law?
Well, the estate tax unified credit went up significantly. So it's going to be probably applicable to a very smaller group of people.
Okay.
However, Massachusetts law did not change, and Massachusetts estate tax only offers a credit of $1 million. So if you die and you have more than $1 million of assets in your estate, you have to file a return, and you may owe estate tax on those assets.
Interesting.
Yeah, $1 million is not a huge.
If you own a house in this area, you're probably at over $1 million.
Close to there, we have an IRA
just with
account.
that, and then.
Correct.
Yeah, a lot of people don't know about that.
Yeah, interesting. So that was what we got sent in before this, but I'm happy to keep talking with you guys if there are other things you were seeing or other advice you'd like to give people, any big items that we're missing.
Yeah, I think another thing that we see a lot of, and we did when we were doing planning leading up to the end of the year, is because of the additional people who are going to be taking the standard deduction, many of those taxpayers are quite charitably inclined, but what we were finding is that because of the standard deduction, they weren't getting any benefit from making the charitable contributions. So one of the pieces of advice that we gave was for them to bunch their charitable contributions, maybe give 2 or 3 years worth of contributions in 1 year so that you could exceed the standard deduction in that particular year, and then take your standard deduction in the intervening years. So there is a lot of planning, even though it's a elimination of a lot of deductions, there are a lot of planning opportunities that arise as a result of it, and you have to be thinking along those lines.
I hadn't thought about that. I do feel like people make pretty, maybe not huge, but common, like their $100 a month to whatever, and then they won't be able to deduct that.
Right, and that doesn't mean they won't give, but it's
Right.
it's an economic factor in their giving.
Anything else that you guys want to point out?
It's some more clients or more taxpayers may need to go on extension this year. We're finding that if you are a owner of a pass-through entity, partnership or an S corporation, those returns, many of them are going on extension because of the complexities around the law, and as a result, the individuals themselves may need to go on extension.
Okay. Was that it? I'm good.
I think I'm good, yeah.
Okay, great. Yeah, you can just